The inflation report from PPI surprised the market by showing downwards of about 0.1%, negative 1.1%, that giving a breathing room for the Fed to cut interest rate. Not just that, the ECB announced its rate and what could it mean for the future of euro and euro dollar. Not just that, the Japan's political stance overshadowed the GDP. And the commitment of reports, the commitment of traders report has been released, and we're gonna analyze that. Not just that, we try to predict the next week's market as usual. Stay tuned. First one, the PPI report. PPI report has been expected to arrive about 0.3%, but arrived at negative 0.1%. That's showing the inflation is cooling on the producer side. But you gotta understand this with caveat. People are looking at this as means for the Federal Reserve to cut rates. See, it's more of sentimental. So the Fed wants to cut rate. It announced at the Jackson Hole speech. But this will be the catalyst for that 25 basis point or even 50 basis point, which we actually predicted on our last 4 to 5 videos before anyone even talking about 50 basis point. Anyways, so that gives the reason for the Federal Reserve to actually cut interest rate on a Wednesday, which is very crucial to actually look at it. Not just that, the European Central Bank announced its monetary policy rate. It doesn't change like about 2%, but what matters is they have confidence on their economy and the control of inflation. They show we're not going to cut any, have any cut cycle or hike cycle, but they have more of a hawkish stance. They want to see the data coming in. So the market interpreted it as a hawkish stance, but the Federal Reserve, as we know, has been expected to have dovish stance, which is free money, easy money, cutting interest rate, making it weaker dollar, and the policy divergence between the euro and the dollar is going to affect euro dollar, and it's going to make euro dollar skyrocket upwards. So, and Japan side, Japan's economy has been surprisingly strong in Q2 GDP over 2% upwards, surprising the market. But the political instability actually made the Japan strong GDP appear nothing on the charts, to be honest. And this unresolved political issue is going to outweigh on the BOJ's decision on Friday about the monetary policy, because on Friday, the BOJ is expected to announce its interest rate, and the BOJ told they want to cut interest rate, but they don't have a reason to do so because they have a robust GDP. Not just robust GDP, the political uncertainty could outstand that decision, but we'll be discussing what could happen on next week in a moment. So the big thing that actually came up to me is that the commitment of report net short position on the US dollars. So on futures market, on June, the US dollar was net short $20 billion. But now it's just about $5.1 billion net short against USD. So the USD narration has been decreased from a highs of 20 billion to 5 billion only. But in my prediction, this was the case because there are major key economic data coming in expected that they do not want to risk. So they trim their position, making it net short to just 5 billion. But after the announce of interest rate, this number surely is going to go up to more than just 5 billion to like 10 billion, 9 billion, something like that. But we'll be watching that on the next week. What's going to happen next week? Everybody's going to expecting that. Yeah. So on next week, on Tuesday, USD retail sales will be released. And if that retail sales data shows the weakness of consumer spending, also there was a consumer spending report on Friday that showed that weakness on the consumer side, that gives another reason for the Fed to cut interest rate. So if this thing shocks the market, not just the 25 basis point of rate cut, it's going to be more than like 50 basis point of a cut on Wednesday, as we all know. On Wednesday, the FOMC rate decision, everybody's going to expect that. The world is going to go kaboom, obviously. So if the interest rate is 50 basis point of cut, the rate cycle cut will be higher. And Trump is going to be happy about it. Trust me. Scott Bessent is going to be happy about it. But it shows the underlying weakness of US dollar. And the dollar acceleration of weakness could spiral out of control. But it's good for the debt crisis that US dollar has. But we'll see about that on next week. Thursday, the Bank of England will announce its rate decision. The Bank of England is actually in a very, how can I put this particular situation, because they're fighting of weaker growth, higher inflation, and there's no that kind of a crazy politics behind it, but the data are coming in very contradictory. So it's really hard for me to predict either, and also I'm not involved in that. I'm more of a USD currency guy. So for the traders, there could be a very little chance of changing the monetary policy, as we know, because there's a lot of uncertainty. We will see about that, and I will tell you the potential catalyst and what could happen in the next week. Next, so the Bank of Japan is gonna announce its interest rate on Friday, which is expected not to change, but there is some caveat to that. So let's discuss what could this mean about the market. So on Wednesday, if the FOMC decided they were going to be 50 basis points like they did last time, the market is going to take that pretty aggressively. People are going to net short on the US dollar. It's going to spiral very quickly. And not just that, people are actually anticipating and expecting the tone of Jerome Powell, what he's saying, the next rate cut situation, because the market is really fixated on the future. So if he's signaling there will be more rate cuts in the future, that is going to show the deterioration on the labor market and substantial control in inflation, or they could sacrifice that mandate. That will be very crucial. So if they are deciding 25 basis point, there won't be that much of reaction as 50 basis point do, but it's like more than 100% true. The market actually knows that the Fed is going to cut rates 25 basis point or 50 basis point. The question is going to be, is it going to be 50 basis point? If not, how many cuts are there in this year? Like October, November, is it going to be December? Like those things will be questions, and the Fed's stance will matter a lot. And the Bank of England, at the same, like they will be asked some questions how they think of their monetary policy. They have PPI, CPI data coming in, so that will influence the rate decision too, and that's going to significantly affect the BOE stance. So, but the interest rate differential, for example, the policy diversion. If the Bank of England is hawkish and the United States, the Fed is dovish or easy money, the pound is going to rally up pretty significantly because there have been inflation higher, really hard to control that. That makes the currency a bit stronger on the forex market. Okay, and at last, Bank of Japan. So the Bank of Japan, this thing is really, really crucial. Listen to me. So the Bank of Japan announces a rate hike, the world is gonna go crazy. I repeat, the world is gonna go crazy. Why, you might ask? Because of something called the carry trade. So basically, people borrow money from Japan for basically zero interest rate and convert that to US dollars and buy stocks, commodities, on a US market that pumps the stock market. This is the typical strategy of carry trade. But the bad thing about it is when people stop borrowing because of higher interest rate on Japan, because if they hike interest rate from there, they have to pay interest off of the thing they borrowed from Japan. So they have to sell the US stock or commodities they have here, which makes the US stock plummet downwards because they have to cover their position. And carry trade is not just a simple trade, it's in the billions of dollars trade. So the effect could be small. It's just like 0.3% or 0.25% of rate hike. But the market interprets it as like the world is ending because it's in billions of dollars. So the selling position is going to be pretty sharp. But chances of happening that, it's really slow. But if any of rate hike is going to happen in Japan, the stock market is going to get hit. Everything is going to go crazy. But it's very less likely for that to happen. So this week, it's the week for the gold. Gold is gonna rally up, making new highs. But it's gonna be very hard for making new highs every single time because new highs are a new basically resistance. So, but when the rate cut is announced, it's gonna rally up. Not just that, if the Bank of Japan hikes the rate, it could probably support gold because gold safe haven asset will be very shiny for the investors. So people will invest a lot on that because of the geopolitics and the G7 countries are planning to impose another tariff on China. Yeah, so that's gonna affect a lot of things. So this is a week. Next week is gonna be week of gold, week of euro. Anything against dollar is gonna be appreciated a lot, except Canada, because there are a lot of things happening. So I provided to you the major currencies. Do let me know on comments what currency pair I should be focusing on, or any questions you have. I'll be happy to answer. Don't forget to like, subscribe, and follow me. See you next week.